my name's James Nicholson and welcome to this week's property news. So much happened this week, so much is also going to happen next week as well. This week we had the Bank of England, we had the Federal Reserve, we got an update on the Renters' Rights Bill, and next week we've got the inflation data and we've got the spring statement, which could have a big impact on the property market as well. There's so much going on, as always at the moment in the property market. And if you're new around here, we're a property channel that talks about interest rates, house prices, investing in property and much, much more. Do make sure you subscribe to the channel over there and hit that bell notification. If you have a look around this video, we're so close to 40,000 subscribers now, so help us get there a little quicker. And let's get some more views on this video. Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm. And press that share button and WhatsApp it, Facebook it, or email it to one of your friends as well. So much happened in another busy week in the property market. I say that every week. I know it gets boring, but it's true. So much really did happen this week. We've got lenders cutting rates. We've got federal banks making the rates stay the same. And we've got an update on the Renters' Rights Bill as well. So let's get into this. So the first thing I want to talk about is the Federal Reserve. And so they held their rate at 4.25%. Now, this was an interesting meeting because they had a press conference after, which I listened to, and nearly every journalist talked about tariffs. What's the impact of tariffs expected to be on inflation? And the Federal Reserve, they don't want to be seen to be political, but they did address it. And they said that the tariffs are going to cause higher prices and more inflation in the USA. It also could impact inflation around the world again. And this is silly, this trade war. But what we need to happen, and what they were hinting at, is that we just need it to either happen or not happen. It's the uncertainty the Federal Reserve talked about a lot that's stopping them cutting rates at the moment. If they really understand what path they're on, they can plan effectively and bring rates down. Now, they're expecting rates in America to drop 2 more times in 2025. It was at 4 times around December, but that expectation has been hit because of these Trump tariffs. The problem is, as I said, it's the uncertainty. 1 week the tariffs are on, the next week the tariffs are off. And that's a problem for businesses. It means businesses don't know how to manage their supply chains, don't know when to order. Do you order now when the tariffs are on, or wait a week till they come off? And that's a problem. So we need to keep an eye on what happens. April 2nd is the next big tariff deadline. Trump is saying at that point they're going on everywhere and there is no coming back from that. So we'll see. And if that happens, fine, it's done. And then people can adjust accordingly to that. So Federal Reserve has held rates, but they expect to cut 2 more times. The next day was the Bank of England. And their rate sits above the Fed's rate at 4.5%. Now, the Bank of England, they like their rate to be close to their American counterparts. And that's because we want the currencies to not be too volatile. We don't want the pound and the dollar to be too volatile. The Americans aren't so fussed, but for us, we don't want the pound to really fluctuate because import-export gets complicated when that happens. The Bank of England were also asked about tariffs and the impact that that will have. And again, they talked about inflation. They talked about other things as well, like, for example, the spring statement. What does that bring to the economy? And so the budget or the spring statement is next week. And the expectations are that benefits will be cut, spending will be cut, and there's nothing really expected to be in there that's going to stimulate the economy. I've been in business now since 2004. And I recall when the VAT rate dropped to 15%, we're at 20% now. For years and years and years, it was at 17.5%. Then it dropped to 15%, then it went to 20, or maybe it went back up to 17.5, then up to 20, I'm not sure, but it went to 15%, and that did stimulate the economy. That would be a smart thing to do right now. I can't see them doing anything like that. The Bank of England talked about rate cuts. We've got 2 expected in there. The markets, however, believe that Bank of England will cut 3 times, and that's based off the fact that the economy is slowing, unemployment is expected to rise, and that really is something that they'll have to do to get the economy going again. So that's the Bank of England. Mortgage rates, what's going on with these? Well, not loads. So last time, after the Bank of England cut rates last month, there was a flurry of activity and lots of banks cut rates. This time, because we had a hold, one lender cut rates, and it was quite a big cut. It was nationwide, and it was a product focused on first-time buyers. I did a video on that that's coming out tomorrow, so check that out tomorrow. And this product is focused on first-time buyers. It gets the rate down by 0.26%, over 0.25%, and it's cutting into their margin. But the reason for that is that the first-time buyer market is expected to slow down significantly because of this stamp duty increase that happens on the 1st of April. Pretty much any first-time buyer that goes to buy now is going to get hit by that, because you can't get a transaction done by the end of next week. It's just not likely to happen or possible. So that product is designed for that. I think other lenders will look at the first-time buyer element and see how they can support them and get lending going. At the end of the day, they want to lend money because that's how they make profit. So they will look at cutting rates on these types of products, and I think you'll see other people do that. It's not on the headline rate, so it's not the cheapest rate in the market, so it's not a sub 4% market, but check out the video tomorrow and have a look at all about that. Renters' rights, there's an update on that, and that is to say that the next reading in the House, the next stage of the Renters' Rights Bill, which fills landlords with fear, is going to be April 24th, after the Easter break. So obviously the MPs need a nice long break at Easter because they work so hard before they get their huge summer holiday as well. And so after the Easter break, they will be back talking about renters' rights, looking at those amendments that have been proposed, looking at all of the stuff, and we'll have a massive update on that next month on what expectations there are on the Renters' Rights Bill and where it goes and how quickly we could expect that to move forward. Remember, the Renters' Rights Bill is talking about allowing pets, Section 21 being abolished. There's all sorts of things in there. There's amendments being put in there and requests to abolish the Section 21 thing. There's problems with the court systems that people are talking about, saying they're not ready to cope with all of these extra cases and stuff like that. There's a lot on the plate there. So we will be looking at that in detail, and we've got that date now, April 24th. So look, it is a busy week. The Bank of England's holding, indicating 2 cuts this year. The Federal Reserve is indicating 2 cuts this year. The markets expect 3 from the UK, but I think you're going to see some more lenders cutting rates in order to stimulate the market and get lending going. In the first 3 months of this year, January, February, March, 500,000 properties will have been sold. In the next 3 quarters, the next 9 months, we're only expecting to sell 500,000 properties. So we're going to do the same in the next 9 months as we did in the first 3. That's a massive slowdown in the market. So keep an eye on what expectations are there, and house prices and asking prices. You could start to see those drop. Do smash like, do subscribe, do check out all the other content as well on the channel, including this video right here.